Welcome back. We are going to cover 15-3's work together, which is on page 454, but I want to make sure that the girls all got to see one of my favorite t-shirts I have. Women belong in all places where decisions are being made, so make sure that you grab onto your power. This is Ruth Bader Ginsburg, one of my favorite people on the face of the earth. So let's go ahead and talk about this first few steps. There's 3 steps in this work together. It tells us, it wants us to calculate depreciation expense. We have a color printer that costs $950, and the printer has a salvage value that's been estimated of $150, and it has a useful life of 5 years. So we are going to take 950 minus 150 and get 800. We're going to take 800 and divide it by 5, and we are going to get 160. And that is the amount of depreciation expense we're going to record every single year of the asset's life in year 1, 2, 3, 4, and 5. So if we go to the next step, it wants us to calculate the book value. Book value is original cost minus accumulated depreciation. So the accumulated depreciation are the 2 years at the point that it wants us to do it, because it's at the end of the 2nd year of service. So our original cost again was $950. We depreciated $160 in year 1 and $160 in year 2, which means it's now down to a book value of $630. And that doesn't, your salvage value doesn't impact what that book value is, because we're just accumulating depreciation. And whatever that accumulated amount is, we take away from original cost. So then we go to our 3rd step, and that is accumulated depreciation. On December 31st, Southside Electric determined its total depreciation expense, and its total is $2150 for the office equipment and $7450 for store equipment. So keep in mind that printer we did in the first step is just one of the assets. We would do it for every single plant asset we have, and we would, for all office equipment, add up what the depreciation expense is for the year, and then for store equipment what it is. So we did one asset, but here's the total for each asset class. And it wants us to journalize the entries for this. So both entries are going to get done on the 31st. The first one's going to be depreciation expense office equipment. And then accumulated depreciation, the contra asset. And then for store equipment. And it is always going to be the debit to expense, just like most of our other adjustments, except for these 2 that we did in the last section. And then we're crediting the contra asset. And again, they gave us the amounts that we want to use, $2150. And $74.40. And that's it for the entire 15-3 work together.